Hello, and today we're going to talk a little bit about how we determine debits and credits. So, we're going to start with a little explanation on the accounting equation, and we're going to talk about why oftentimes people get confused between debits and credits, and we'll try to clear that up for you. Okay. So, for the purpose of this conversation, I just want you to think of debits as being left and credits as being right. Okay. So credits they're on the right side, okay, and debits are on the left side. That's all. And so we will go. Let's like this. That's it. Debits on the left, credits on the right. That's all we have to think of when we're doing this. And the reason why is because we treat all accounts in accounting like an algebraic equation where we have to keep the sides balanced. Now, the accounting equation is assets equals liabilities plus, I should say plus, owner's equity. So let's do this. Let's go like that. Let's do this, and let's add a plus sign here. Liabilities plus owner's equity. That is the accounting equation. So whatever I do in an accounting entry, I need to make sure that this equation stays in balance, okay? That's the main thing. So if I increase assets, I either need to increase liabilities or owner's equity by the same amount, or decrease a different asset account in order that the equation stays balanced. For example, if this was not words, right? But if we just put numbers in here. So let's say our assets are 500, our liabilities are 400, and our owner's equity is 100. These are now, they're balanced, right? Because 500 is equal to 400 plus 100, right? So we're balanced, okay? So whenever we determine if we're doing a debit or a credit, we're making sure that we keep this in balance. So first of all, we have to understand what assets, liabilities, and owner's equity are. Assets are things that we own, such as cash, rights to a receivable, like an accounts receivable. A customer owes us money, we own the rights to that receivable. It's like if you borrow from the bank, they own the right to receive money from you based on that debt that you owe, okay? So assets are things that we own. Cash, accounts receivable, inventory, fixed assets like cars, equipment, things like that. Those are all assets. And then liabilities are things that we owe to other people. For example, if we buy something but we have 30 days to pay for it, we owe whatever the amount of money that we purchased that thing for. That's a liability we owe. If we borrow from the bank to buy a piece of property, we owe the bank. That's a liability. And then owner's equity is made up of two things. It's made up of what we invest in the business to start up or additional investment, and retained earnings, what money is left after we pay all expenses in any given period, can become retained earnings, okay? Now, owner's equity is actually made up of two more types of accounts that we call temporary accounts. Now, these assets, liabilities, and owner's equity, these are permanent accounts. They live on our balance sheet, and they don't arbitrarily reset to zero after an accounting period. They roll from one period to the next at whatever their balance is. Now, we also have revenue and expenses that affect owner's equity or retained earnings specifically. And so we have to learn how to debit and credit revenue and expenses appropriately. And all we have to do in order to realize which way we do that is we have to think about how they affect owner's equity or retained earnings, right? So does revenue increase or decrease retained earnings? Well, it increases it. And we know because retained earnings is on the right side of our accounting equation with owner's equity, that it increases with a right entry, which is a credit. Okay? Liabilities increase with a right entry, which are a credit. Assets, however, increase with a left entry, which is a debit. Okay? So revenue, because they serve to increase our equity section, our retained earnings, we increase revenues with a credit because this side, the right side of the equal sign, increases with a credit. Now expenses, they reduce, they make our owner's equity section, our retained earnings less. So we increase expenses with a debit because that's how we decrease owner's equity, right? I know that sounds a little bit confusing, but as expenses go up, equity or retained earnings go down. So that means we have to use a debit for expenses, because we're ultimately what we're doing is we're making retained earnings go down. So expenses end up on the left side. Okay. So essentially what we have to realize, what we have to know is that depending on which side of the accounting equation the account falls on, that tells us whether we're using a debit or a credit. Okay. And so that is the main knowledge that you need in order to determine if we're debiting or crediting an account when making an accounting entry. Okay? I really hope this helps clear up the issues of debits and credits for you. And if you have any other questions, please feel free to let me know.